Welcome back, our SABC News viewers. Now let's take a look at your market news now. Asian markets mostly rose this morning, with Hong Kong and Shanghai rallying on hopes for an easing of the China-US trade war, while energy firms also enjoyed a much-needed bounce as oil prices stabilized. The pound also held up after British Prime Minister Theresa May narrowly won support for her Brexit deal from cabinet members, although Apple suppliers faced renewed selling. Fears about the trade war, rising Federal Reserve interest rates, tensions within the European Union, and slowing growth in most economies have forced stocks south for the past few months. Tokyo's Nikkei dipped 0.2% to end the day at 21,803 points. The Hang Seng gained 1.2% at 25,945, and the Shanghai Composite ticked up 1.4% to 2,668 points. US stocks fell last night, with the S&P 500 notching a fifth straight day of losses, as financial stocks were hit by fears of tightening regulations on the banking industry. The Dow Jones Industrial Average fell 0.8% to 25,081 points, while the S&P 500 lost 0.75% to 2,701. The Nasdaq Composite dropped 0.1% to end the day at 7,136 points. For more on the markets, we cross to Arabile Gumede at the JSE. Arabile, over to you.
Yeah, good afternoon, Nzinga there. Of course, the market down again today. It has been quite a terrible time of late, seeing it drop now 0.2% or so. Even the rand stabilizing somewhat at around 14 rand 20 odd. The good news is, of course, that the oil price is firmly below that $70 a barrel mark. That would certainly help petrol prices in South Africa. So we are expecting, according to AA, that we will see a big drawdown when it comes to the petrol price. Just how much is, of course, something we will only see towards the end of the month. But with that, let's check in on how the local and European markets are faring. Well, Chantal Marks from FNB Wealth and Investment joining me now as we unpack the markets a little bit more. Chantal, thank you so much for your time. Down just 0.2%. It's not bad, but it's the consistency of these drawdowns that we keep getting in the market, which certainly are hurting.
Yeah, and I guess what's depressing about today is the fact that we actually had a pretty positive start. So, I mean, we took positive cues from Asia. The rand was strengthening. We were really, really firmly in the green. And then stuff that happened in the UK, of course, a whole lot of things happening around the Brexit negotiations and the adoption of Theresa May's deal going on at the moment, and that's just taken risk way off the table. The rand's weakened a little bit, even though it's still stronger than yesterday, and the markets reacted very negatively. Yeah,
those Brexit ministers then falling by the wayside and saying they don't want to be part of this anymore. Do we see an end in sight for Brexit, do you think? Do you think, markets are pricing in sort of a no deal, by the time that deadline comes through?
Yeah, well, it's very difficult to say because it could be pricing in a number of factors, but certainly it's not going to be an easy ride. It doesn't seem as if Theresa May's latest deal has the support that it requires in order to actually pass in Parliament. And there are a variety of things that can actually happen because of that. So she could be removed as leader of her party. There could be a second referendum. There could be a hard Brexit. So there's just a lot of stuff that could still happen and a lot of risk still in the system. And any kind of negative news around Brexit that adds to uncertainty and extends the deadline of when we will finally have some clarity and finality on it is bad for the market.
Yeah. Let's bring it back home a little bit more now and talk about the stock that's fallen now just over 5%, the Mediclinic coming out with earnings. It does feel, however, that any slight miss of your estimates, of any sort of guidance, means that you're going to fall and you're going to get hit. That's certainly what's happened today.
Yeah, I mean, so Mediclinic actually guided for exactly this result. We knew it was going to be weak. We knew there was going to be issues coming out of the Switzerland business, massive regulatory pressure there. We knew that EBITDA was going to come under a lot of pressure, and that translated into a weaker earnings number for Mediclinic, which they guided for beautifully. But this confirmation that things really are as bad as they said it was going to be just kind of spooked the market a little bit extra.
I thought certainty was the best part of the market.
So that's what's confusing me about this fall as well, because the share price was down dramatically after that initial trading update that guided towards this really weak result. So you would have expected perhaps just a slight sell-off today, but certainly not to the extent that we've actually seen. I mean, this is over 5% at the moment. But I mean, yeah, you could argue that between the trading update and the result, we've seen an increase in the share price steadily since then.
Sure.
So perhaps this just kind of reaffirming that investors should feel a little bit negative, or a little bit more negative around Mediclinic.
Also should feel a little negative around Investec, around 2.5% down as well. They came up with a trading update as well today, or rather their financial results for the 6 month ended 30 September. A good set, a bad set from them?
Yeah, I mean, actually, from an overall perspective, it looks pretty strong. They beat on the headline earnings per share number. Revenue growth was higher than expected, but it seems as if the devil is in the detail a little bit. Earnings were boosted by releases of impairments, and that generally points to a lower quality type of result for a bank. And then there also seems to have been some cash outflows, or net cash outflows, from the asset management business, which of course they're looking to list separately next year, and which actually resulted in quite a nice re-rating for the investment stock. So I haven't gone through every single line item yet.
Sure.
It's a pretty
it's a long one.
Yes, it's a pretty long one. But just as a quick thought on why the share could possibly be down if results are better than expected.
Yeah. Certainly an interesting look there at all the markets there on that front. Let's take a quick gander at the Rand now. 14.27. We've seen it even go well below that 14 Rand mark a while ago, just last week, and it was so great. It felt good. But now we're seeing it sustain, you know, that mark at those levels at 14.27 odd. Should we be expecting the Rand to sort of maintain this mark? You know, hoping, of course, that nothing dramatic happens locally.
Yeah, I mean, if anything dramatic happens locally, it will certainly reflect in a much weaker Rand. For the moment, though, it seems as if that local conditions have kind of calmed down, and that we should be more concerned over what goes on in the rest of the world. I mean, this Rand strengthened to, I think, 14, 15 odd this morning.
Yeah.
And it's already kind of weakened again as a result of what's happened in the UK.
Yeah.
So external factors are still going to play quite a significant role. Dollar strength is going to play a significant role. If the US Federal Reserve hike rates faster than anticipated, you could expect the dollar to be stronger than expected, and the Rand could remain at these weaker levels. Fundamentally, though, it still seems as if the Rand may be slightly undervalued. So we would expect a near-term strengthening if everything stayed exactly the same.
Interesting mark as well for the oil price there, firmly below $70 a barrel. It's actually at around $66 a barrel or so. So that's an interesting mark on its own there. Fortunately, we have run out of time, but Chantal, really appreciate it there. Interesting look at the market, as you can tell. Yes, a whole lot of red, but so many little parts that play a part in how the market is faring right now and what could actually turn things along. Let's not forget that Italy's got its own problems as well. And as we spoke about Brexit too, which will certainly be part of the market's conversation. That's where the buck stops this afternoon. And Nzinga joins you to complete the hour right after this.